At London Financial Studies, we focus exclusively on capital markets. Our programs offer practical learning to professionals from all over the world. Public courses are delivered in London, New York, and Singapore. Our teachers are leading experts in their fields with a wealth of practical knowledge. They are skilled communicators who can get the message across quickly and effectively. Dr. William Allen has over 30 years' experience in banking and finance in London and New York, including senior positions at JP Morgan. He is a senior consultant and regular speaker in the areas of executive bank management, ALM, Treasury, derivatives, portfolio management, and regulation.
Just a decade or so ago, when we talked about asset liability management, we were primarily focused on the banking book, particularly interest rates and liquidity risk. But now we're looking at a more strategic overview, a portfolio approach of all the business units. We've seen a need for the management tools to increase in scope, in breadth. Asset liability management has fulfilled that function. It is a way of incorporating a broad range of businesses at the bank. ALM is becoming much more like portfolio management. Portfolio managers have looked at different allocations to asset classes. They have measured, evaluated the returns on those asset classes. And now what we're seeing is the ALM function is looking at business units across the entire bank. Various financial institutions have a strategy. They have target customers, products that they will offer these customers in different market segments. And asset liability management is a way of bringing this together, often through a planning and budgeting process. So ALM is an opportunity for the senior management, chief executive, chief financial officer, to interact not only with the line business units, the heads of the various business units, but also key support areas including risk management, including capital markets, including the finance and compliance functions. After the financial crisis, we saw senior regulatory bodies commenting in a number of documents, a number of reports about failures in asset liability management. In the financial crisis, what we saw is that a number of institutions were misusing their liquidity, over-demanding the liquidity of the balance sheet without properly transfer pricing, attributing that cost into the various business units. Today, what we see in banks around the world is a need to up-tier the type of capital and the amount of capital that they have relative to their risk-weighted assets. Secondly, we have the challenge of providing liquidity, not only short-term liquidity, short-term liquid investments on the balance sheet, but also thinking about sourcing longer-term funding.
This LFS course covers best practice in asset liability management and highlights the strategic role of ALM to the management of capital and performance for financial institutions.
So the ALM process, as we review in the course, is really an interactive process between the business units, the various line professionals, suggesting what they can achieve, what they would like to achieve if they are allocated resources. And of course, the feedback loop is that senior management is then able to prioritize what business strategies, what business unit priorities they have in mind. Some of the interesting discussions that we've had on the ALM course have been around interest rate risk in the banking portfolio. One area that is becoming increasingly challenging today is to look at basis risk, where we have assets, liabilities that are pricing off of different benchmark curves. And how do we measure that? How do we take that into account? We use Excel spreadsheets to develop these techniques, and we push these concepts more strategically to look at the choices. The type of delegates that have attended the ALM course are a wide range, from senior management who need to be able to communicate their objectives with their line professionals, all the way to the various line units, heads of businesses, but even the day-to-day operational professionals who are making the business happen, to understand how what they do on a day-by-day basis shows up in the ALM reports, how that is analyzed, how it feeds into their performance metrics, their evaluation, of course finally ending up in their compensation. We have many Treasury professionals who do attend the ALM course. They see that this is an opportunity to grow their skills, to increase their skills beyond just the very specialized techniques that they have in Treasury. Most bank management prefer to manage their institutions as a return on capital. This is what they like to talk to their shareholders about. This is what their quarterly, semi-annual earnings calls are about. And ALM aligns itself very well with that senior management approach. It's hard to imagine today that someone who would like to have a long-term career moving up into management, then into senior management, could do so today without an understanding of asset liability management.